first guest for today. Joining me is Feroz Aziz, who's the Deputy CEO at Anand Rathi Wealth. Great to have you on the show, Feroz. As usual, I want to check in with you. Last week, we saw the Nifty, down by about 2.5%, 6 incessant days of selling, but Friday was a bounce. Going forward, do you think that this was a dead cat bounce, or do you think, the worst of the selling is perhaps behind us?
Good morning, Nanda. Point one, yes, like you rightly said, we had 6 successive days of market correction. But if you look at it, it was also the month-end expiry. 26th October was the last Thursday of this month. When you saw the kind of carnage in the market, which is consecutive days, you also like to see what kind of roll cost happened in that expiry. If you see the roll cost or the futures ended at premium, November futures ended at a premium about 120 rupees, which is marginally more than the cost of carry from a treasury bill perspective. So that automatically said that we were oversold, and that's why the bounce, point one. Point two, when it comes to markets, people generally digest the gains which have come in the past. But if you look at, we are just about 6.6% lower than the peak. If you look at the last 22 years, 23 years of history, the drawdowns every year average have been 14, with 4.8 being the minimal. So I don't think this is a correction which is substantive enough for a person to be worried from a investor standpoint. Because if you're looking at the average of the last 22 years, leaving the GFC, which is the global financial crisis, and the COVID years, which were exaggerated years, you leave them apart and there's a 14% drawdown from peak to trough each year. And if you include them, then the drawdowns go to almost about 17-18% average a year. So I think we are not in any zone of a sensible correction, I would say, because 6.6% from the peak is not such an exaggerated move from a profit booking standpoint.